Hello traders, welcome to FreeFX. My name is Francesco and welcome to my video. Today we're going to talk about the S&P 500, the SPX. This is the most incredible week we've had for a while, and that's because of this. Now, you remember from my previous videos that I had a triangle drawn, and the triangle basically was to do with consolidation pattern. And the consolidation pattern occurred around here. Okay, so the pattern was broken, and as you can see quite clearly, this triangle was broken the previous week, and then this week we saw confirmation of that break going higher. And as you remember as well, I drew this line, and this is the weekly time frame 21 weighted moving average level, which also kind of coincided with the 4,000 level resistance. And this week I was watching this to see what might happen to price, and what you can see clearly is that we broke through those levels. And so we had a break of the triangle first, and then we had a break of these two levels, the 4,000 and subsequently the 21 weighted moving average on the weekly time frame. Now what we're left with is to confirm whether the next level up, which is the 20 simple moving average from the Bollinger Bands in orange here, which is just where we are at the moment, is going to provide resistance. Previous occurrence of that was back here in March, and as you can see we had a very clear resistance occurring at the simple moving average, so the middle line of the Bollinger Bands. We had one candle up from the bottom, a second one between the two moving averages, then a false breakout above it, and then a deep move further down. And this occurrence is slightly different because, as you can see, price action differed in many ways, but we're still to confirm the move above, which would obviously deny the downtrend, and we don't know about that. Now, I've sort of looked at this in many ways. Obviously, fundamentally, we have had a few earnings misses, and so not all companies from the FANGs actually reported positive earnings and earnings per share, revenue, etc. Not all of them. Therefore, it's a mixed bag. It's not enough that one of them, I think it was Amazon or Apple, I think, did better than expected. But others like Netflix and Facebook, etc., didn't do so well. So we Alphabet as well. So we might sort of have to think about whether what other fundamental factors could sort of pull this up. Well, there aren't many, because we've had 2 negative GDP quarters for the US, for example, and that confirms a recessionary period as per kind of standard definition of that, and then we can get into a debate as to what that might mean. And then the other thing is that we've obviously had a lot of pricing in of the Fed rate hikes, but we still had that, and the PCE, personal consumption expenditure, came out quite strong today, which confirms that inflation is likely to continue higher. From what I understand, that obviously means the Fed will continue hiking rates based on data, and that data is saying that it hasn't slowed down yet. So the Fed will continue that. They will continue withdrawing the supply of money into the system through the QE program. So we're into QT, and we are still technically into the downtrend, as you can see from the weekly. Now, so fundamentally we've had all these, and we really don't see any kind of light at the end of the tunnel. From a CCI point of view, there is a coming out to the middle level there. As we started a downtrend in January, you can see that we came out to this middle level in March, and that's exactly the point where we had a fake out here. So we might experience the same thing here. I don't know, but it's worth thinking about that. Now, if I go to a slightly different chart, this is the SPX, but I'm going to the futures chart. we've added an RSI. The RSI is on the weekly again. The settings here are 80-20 rather than 70-30, because that kind of indicates extremes. Okay, and I'll show you why in a minute. So this is the weekly. Again, we come into the middle band, so we're not overbought or oversold, but we're just the middle band. But this is not why I'm showing you this. It's more to do with this, which is the hourly. Okay, so on the hourly, we've come up to overbought here on the 20th of July. Okay, so that was yesterday, and we started basically diverging, and that divergence is pretty obvious to me. So if I just do that, okay, you can see that divergence there, and we can make it slightly stronger if you want to see that better. Okay, so we have divergence, and that's negative because price is moving up and this is moving down. Likely could be denied because we've had this. Well, I think we've had this in the 4-hourly before, which I showed you before in the previous video. But anyway, the point of that is that we've come to an extreme at 80 on the hourly. If I go back as far as I can, you'll see that it's not very often that we do come to the 80 RSI on the hourly. Okay, and the last time was here, which is in May, and then after that we started declining, and each time we tried to regain those highs, RSI kept diverging until we collapsed in June. Okay, fundamentally this was the June rate hike, okay, which again was sort of priced in, but you know, it didn't stop the markets just taking a hint. We are still in that kind of situation. So the extreme has been touched the same way at 80, and we've had a divergence, and prices struggled to get much higher than that. And also, if I go back to my other chart, the SPX, you'll see that I drew this last week. So let me go back to the 4-hourly now. Okay, that was a divergence there. So from 7th of July to the 19th of July, lower highs 1, 2, 3, and then, you know, kind of similar highs on actual price, a higher high but a divergence on the CCI. This is the CCI here, and then eventually we've had this drop. Now, to be fair, the drop in price wasn't that great, quite a modest drop, more than the CCI itself. Big pickup here, and now again divergence. As you can see, the CCI has come down twice, whereas price has gone up twice. So now we have to draw another divergence, which is here. Okay. And what's interesting is that we have, let's take something off there. Okay. You can see that we've got an extreme because we've gone beyond the 200 value. So we've gone really high very quickly and then dropping back. So CCI has pulled back and prices continued higher from the 27th, so from Wednesday. Okay, but where is that going to go? Well, either CCI conforms or price conforms. You just have to see. So we have this divergence as well to keep in mind. If I go to the daily, again, just to confirm all the time frames kind of aligning, okay, we are at the 200 with the daily as well. And so CCI has kind of come up 3 times, but we come to the 200. Now on the daily, the last time we came into 200 exactly was here in beginning of July, 2nd of July. And that obviously didn't stop the uptrend. and that was a year ago, so just over a year ago. But that was a different environment for now. So we've obviously had this situation where we come to an extreme pretty quickly. It'll be interesting to see what happens. Now, I said it before that touching on the lowest point, the negative 200, hasn't stopped the downtrend before. So it's really a confirmation sometimes rather than a pullback. If we go back to the 2008 financial crisis, as I've done many times before, you will see that, let me go back a little bit, you will see that we have quite a period of touching on the minus 200, and price continues to move down. Okay, so essentially what I'm trying to say is that we have had this pullback. Just to summarize, we've had a pullback and we've come up to this new level here, and the new level is an extreme for the CCI, and obviously we need to see what happens to the wider trend, and the wider trend is defined by looking at the weekly time frame. Okay, we're still under the SMA. And one more thing, which I haven't really mentioned, but it's kind of worth pointing out, is that if we were to insert an indicator such as the simple moving average, okay, I'll just put moving average, okay, it's just a simple moving average, and if I change it to 200, well, the 200 is, you know, a general kind of trend confirmation tool, and it's quite important to keep an eye on it just to kind of see where price is at. So I'm going to make it purple and just a little bit stronger in color. Okay, so on the 1 hour, we're obviously above it in price, and if I go to the daily, we're still underneath the 200, and if we go to the weekly, we are underneath it. I think it should be, but it's not showing us, so it might be out of range. No, it's not. It's just not showing it. It's not computing it from the future side, so we're going to stick to the daily. Okay, so that's kind of where we are. So trend wise, we're still under the 200 day moving average, which we broke a while back. Okay, so just to finish my video, thank you very much for watching, and I'm still targeting on a short, I'm still targeting lower lows, and in fact my target is around here, sort of these lows from June and July. So I'm looking to hold this short until this, which will be not all the way to the Bollinger Band, lower band, but sort of about 2/3 down. And that's where I'm at with actual trading. So interesting week. Next week is going to be a few things, including non-farm payrolls, but we've had the earnings, and really it's also a case of getting into August, so liquidity might change tack, change pace, and we might see a return to more normal conditions perhaps, and maybe, you know, something might kick in that we've not seen in the last few weeks. Some people call this a relief rally, some people call it just short covering, some people call it balancing the books at the end of July. All sorts of things have been mentioned, but until we see some confirmation of the prevailing trend, this looks very risky to hold short, so I'll have to keep my eyes out on that, see what happens to this level. Until then, Have a great weekend, and I will see you next week with my next video. Thank you for watching. Take care.